We think the value of our currency is set in stone, printed neatly on paper. But a massive, invisible wave is crashing through global banks right now, quietly, altering everything you own. Central banks just flipped a historic switch that controls the entire global economy. While the media hypes up political drama, your purchasing power is being completely rewritten behind closed corporate doors. Every credit card, mortgage, and auto loan is tied directly to this single number. If you do not understand this sudden pivot, you will end up funding someone else's massive luxury lifestyle. Wealth is never truly destroyed in a financial crisis. It is simply transferred. This massive interest rate shift is officially engineering the largest wealth redistribution of our entire modern generation. For years, financial gurus told you to hoard your cash in traditional savings accounts. But keeping your money flat right now is a guaranteed recipe for slow, painful economic self-destruction. The easy era of high-yield savings accounts, paying a guaranteed 5%, is officially dead. As rates drop like a stone, traditional passive savers are being forced back into high-risk markets. Behind the marble pillars of Wall Street, executives are frantically reshuffling trillions of dollars. They know the old rules of banking are completely gone, yet they keep the public completely blind. Millions of homeowners are waiting for mortgage rates to plunge back down to zero. But the banks are hiding a dark truth. Those ultra-cheap housing days are never coming back again. Housing prices defy normal logic because they are driven by the monthly cost of debt. When interest rates shift even a single percentage point, it alters real estate valuations by millions. Lenders are preparing to flood your inbox with tempting, low-rate refinance offers very soon, dressed up as smart savings. If you accept their exact terms blindly, you will trap yourself in 30 more years of debt. Massive institutional funds are quietly raising billions in cash to prepare for this exact moment before the crowd understands why. They want you to panic and sell your assets cheap so they can buy everything up. The government claims inflation is finally under control, but your grocery bill says otherwise. Lowering interest rates now risks throwing gasoline directly back onto a roaring consumer pricing fire. Money is not meant to sit completely still. It must flow to survive. This massive interest rate shift is designed to force your capital out of hiding and back into circulation, where markets can use it. The bond market is shouting a massive warning that equity marketers are ignoring. When long-term yields disconnect from short-term realities, a massive economic correction always follows behind. Trillions of dollars currently parked in safe money market funds must find a new home. When that tidal wave of capital moves, asset prices will explode in a highly volatile manner. Most people will watch this entire economic shift happen and lose half their net worth. But a select group of informed individuals will use this precise chaos to secure generational wealth. Welcome back to the boardroom, where the economic scoreboard has been completely wiped clean. The financial strategy that made you rich last year will officially make you poor this year. You cannot simply work harder to outpace a systemic currency devaluation of this massive scale. If your income relies solely on a steady paycheck, you are losing the financial game daily. The ultra-wealthy do not view debt as a dangerous burden like the middle class does. They use low-interest debt as a powerful weapon to acquire cash-flowing assets for absolutely zero down. Financial arbitrage means borrowing money at a low rate and investing it at a higher rate. This interest rate drop is opening up massive arbitrage lanes for anyone paying attention. The stock market keeps hitting all-time highs, making average retail investors feel incredibly smart. But these nominal gains are highly deceptive when measured against a rapidly inflating global money supply. If you measure your total net worth only in paper dollars, you are being deeply fooled. When the value of the underlying currency shrinks, asset prices look inflated when they are stagnant. Regional banks are holding billions in toxic commercial real estate loans that are coming due. This rate cut is a desperate emergency lifeline to keep the banking system from collapsing entirely. Private equity firms have quietly replaced traditional banks as the primary lenders to major corporations. This unregulated shadow market reacts violently whenever the central bank adjusts the core interest rate. Thousands of modern companies only survive by constantly rolling over cheap, short-term corporate debt. Higher rates were slowly killing them, but this sudden shift keeps the zombie economy stumbling along. Every major central bank is trapped in a tense, silent game of high-stakes monetary chicken. If one country cuts rates too fast, their currency collapses against the dominant American dollar. We are witnessing a highly coordinated race to the absolute bottom for all global fiat currencies. Paper money is losing its purchasing power faster than the average consumer can physically stack it. As trust in central banking fades, alternative hard assets are quietly reaching historic values. Central banks themselves are buying gold at record paces while telling citizens to trust digital numbers. You cannot print more prime real estate, gold, or scarce digital assets out of thin air. When interest rates fall, capital naturally floods directly into things that cannot be artificially complicated. Average credit card debt has officially broke historical records as families struggle to survive under brutal pressure. The banks are hoping lower rates will encourage you to borrow even more cash right now. Buy now, pay later services are redesigning their algorithms to hide the true cost of consumer financing. They format transactions to look cheap monthly while draining your long-term financial security. Completely. Car dealerships make vastly more profit on financing structures than on the physical vehicles. They are using this recent rate shift to trap buyers into predatory 84-month payment contracts. The macroeconomic picture is officially clear, so we must now pivot directly to execution. Let us break down the exact financial moves you need to make in your portfolio immediately. Go through every single piece of debt you currently hold with a fine-tooth comb. Any variable rate liability must be aggressively targeted before the next wave of economic volatility strikes your household. Do not leave excessive cash rotting away in a standard zero-interest checking account. Move your emergency funds into capital preservation vehicles that dynamically adjust alongside shifting federal interest rates. If you bought property near the peak of interest rates, start preparing your documents. The best refinancing window may be approaching quickly. You need to be ready when the right moment comes. Compare multiple lenders and negotiate aggressively. Banks are starving for new loan volume after a massive multi-year dry spell. Use their desperation to your advantage by lower fees, forcing them to compete directly for your valuable mortgage business. As borrowing costs drops, residential real estate demand will inevitably surge back into the market. Look for undervalued multifamily properties before the general public realizes rates have actually bottomed out. Waiting for the evening news to tell you to buy real estate is a massive mistake. By the time the average person acts, prices have already adjusted higher to flacon ripple to reflect the cheap credit. Move out of speculative high-multiple tech stocks that rely purely on hype for their valuation. Reallocate your capital into resilient, cash-producing businesses that thrive during periods of monetary expansion. When traditional interest yields vanish from banks, high-quality dividend-paying stocks become incredibly attractive. Investors flock to these steady companies, driving up their underlying stock value significantly over time. Most people lose their wealth not from stock market crashes, but from steady financial friction. Hidden wealth management fees, unnecessary taxes, and bad interest structures will quietly ruin your retirement. The hardest part of navigating this historic interest rate shift is overcoming constant media fear. The news media profits from your regular panic. You profit from executing a calm, rational plan. The financial system was never designed to be fair to the average, uneducated consumer. It was built by institutional insiders to reward those who understand the complex rules of capital flow. You can either remain a passive observer on the scoreboard or become an active player. This economic pivot gives you a rare, beautiful, clean slate to completely rewrite your personal financial destiny. The difference between the wealthy class and the struggling middle class is purely a gap in actionable knowledge. Understanding how a single macroeconomic digit functions changes your entire life perspective. The invisible wave is already moving through the global markets, and time is running out. Take control of your debt, position your capital wisely, and prepare to move with absolute confidence. Money will always look harmless, just simple numbers glowing softly on glass screens. But now you finally giant who controls the invisible scoreboard and exactly how to win the ultimate game.